Good afternoon, everyone. I'm Allison Schaberg here, Consolidated Planning Group. We are happy to be back with you today. And today we have Sarah Kendall here with us with the Texas Workforce Commission. She is a subject matter expert when it comes to SSI and Title II benefits and kind of what happens when we work and things like that. So today, what we're going to be talking about is concurrent beneficiaries. And she's got a lot of information that she's going to cover today. So I always like to go over a few things at the very beginning before we turn things over to her. First things first, we are in webinar mode today, and that means that we can't see you or hear you, but we do know you're here, and we are glad that you are here with us today. If you are planning your afternoon, we're going to be going for an hour, so you can plan accordingly around that. We do like to take your questions, and so we do ask if you have questions today to put your questions in the chat box. We'll be getting to as many questions as we can as time allows. And if you have a question, don't be shy, because probably somebody else has that same question as well. If you are attending by podcast and you would like a copy of today's slides, you can reach out to us at 281-690-1177. That's 281-690-1177. Everyone who is attending this webinar today is going to get a copy of the slides as well as a link to the recording so you can play back should you need to in the future. Furthermore, I wanted to let you know that we have done multiple presentations with Sarah Kendall and the Texas Workforce Commission on these matters surrounding SSI, which is under Title 16, and then also Title II benefits, Social Security disability, childhood disability benefits, maybe some of the names that you guys have heard in the past. All of our past webinars live on the Consolidated Planning Group YouTube channel, which you can subscribe to for free. So if you want to go and kind of take a deeper dive into some of the previous presentations that we've had on this matter, it is so much information. It's too much information for one presentation. For those of you that may be attending out of state, Consolidated Planning Group is a holistic special needs financial planning firm. We are domiciled in Texas, but we serve clients all throughout the United States. We are an advisory and consulting firm, and we basically work with families who have a loved one with a disability that may have care needs for the rest of their life. We are members of the Special Needs Planning Academy. We're now also nationally certified as Social Security advisors. We help people put lifetime protection plans in place, lifetime care plans. We do a lot in transition planning. We help open ABLE accounts, which is an account that you can have money in above and beyond the $2,000 limit for Medicaid, for SSI Medicaid. And we do a lot of advocacy through our webinars, and perhaps you've attended in the past. And again, like I said, we're glad that you are back. So we're advocates when it comes to planning. We have a big job in planning for the future of our loved one with a disability. It's a big enough job planning for our own retirement that might last 25 to 35 years. But when we have a child with a disability, we may need to plan for them an additional 25 to 35 years after we're gone. And of course, some families have more than one child with a disability. So these are all things that we should keep on our radar. So because of the content that we have today and kind of taking the deep dive that we are going to take, Sarah, it is certainly my pleasure to be back with you today. And thank you always for taking your time to go through this with us. The truth is this stuff is confusing. And I don't care how much you study it. As a parent, when you're kind of going through this with your kid, it is a little bit overwhelming. So we need this information. Thank you so much. I'm going to turn it over to you.
Thank you, Allison, and thanks for having us back. Again, my name is Sarah Kendall, and I'm with the Texas Workforce Commission Vocational Rehabilitation Division. I am certified by Social Security as a benefits counselor, which is interesting in itself. Social Security certifies people who don't work for them to spread the word about these disability programs. The fact is that they don't have enough staff within the Social Security offices to really know these programs in depth. They have a few staff. Some are called work incentive liaisons. That's one person in each local Social Security office who knows about the disability benefits. And then they have area work incentive coordinators, but these are few people in comparison to the number of people on disability benefits that Social Security serves. So there are three types of Social Security disability benefit programs. There's Supplemental Security Income, and then there's Title II, which encompasses three different disability programs. And then there's folks who receive both Supplemental Security Income and Title II, and that's who we're going to be talking about today. These are concurrent beneficiaries. Next slide. So the information, as Allison said, about these programs is complex. And when you get to concurrents who receive both SSI, Supplemental Security Income, and a Title II, either one or even more Title II disability programs, it gets very complex. So we're not going to have time to review detailed information about Supplemental Security Income or about the three Title II disability programs, but we did do webinars for Consolidated Planning Group, and you can view them on their YouTube channel. And the dates that we did them in 2024 are on the slide, okay? If your family member becomes or is a concurrent beneficiary, receives both Supplemental Security Income and one or more Title II disability benefit programs, you really have to know how Supplemental Security Income works, and then you have to know how the Title II disability benefit program works so you can put them together and make sense out of them. Having both SSI and one or more Title II disability benefits can be a good thing, but managing them can get very complicated. Next slide. So what is a concurrent beneficiary? It's someone who is over the age of 18. So they have to be 18 or older to be a concurrent, and they receive both Supplemental Security Income, Adult Disabled Blind, or SSI, and a Title II disability benefit. So there are three types of Title II disability benefits. They are Social Security Disability Insurance, or SSDI, which comes off your own work record. The one that many of you may be familiar with who are on the call is Childhood Disability Benefits, also known as Disabled Adult Child, or CDB-DAC. These benefits are drawn off a parent's work record. And then there's the Disabled Widow or Widower Benefit, or DWIB, and that's off a deceased spouse's work record. Next slide. So just some basic terms that you're going to hear today on the Title II side are substantial gainful activity, or SGA, and that's a benchmark number that only Social Security uses to measure a variety of different aspects of someone's benefits. This year, SGA is equal to gross monthly earnings of $1,550 or above if you are not statutorily blind by Social Security's definition. If you are statutorily blind by Social Security's definition, SGA, or substantial gainful activity, in 2024 is $2,590 in monthly gross earnings. Then there's the trial work period. This is a 9-month period that happens in a rolling 60-month period that doesn't have to be consecutive. During this period, someone who receives a Title II disability benefit can make any amount of money they want and continue to get their Title II cash benefit. The amount that tells Social Security you've used one of these 9 trial work period months in 2024 is $1,110 gross in a month. Then there's the Title II extended period of eligibility. This begins right after all 9 trial work period months have been used. And that's a 36-month or 3-year consecutive period. During this time, the extended period of eligibility, any month in which you earn above substantial gainful activity, you are not eligible for the cash benefit. If you earn below that during this 36-month period, you are eligible for your cash benefit in that month. And then there's the Title II cessation grace period. This is a 3-month period It happens after a trial work period has been completed, and it's the first time the person earns SGA or above. Even though they're not technically entitled to a cash benefit, they will get 3 months of the cash benefit. And that's the cessation month is your first month, and the grace period is the last 2 months. These are tied together. And again, that's the first time you make SGA after the trial work period. Okay, so for the Title 16 work incentives, if you go back one slide, sorry, Allison. Let's go back one slide, and we'll talk about the title of the SSI basic terms. There's 1619B SSI, which is a great work incentives that allows people who receive supplemental security income to work and earn a living wage and keep their Medicaid until they reach the state threshold. This year in 2024 in Texas, the 1619B state threshold is $50,161 gross. So that means that someone who gets supplemental security income can earn up to $50,161 this year and continue to be what they call an active SSI recipient, and they will receive free Medicaid. Now, I know there's someone from Colorado on the call, and the 1619B thresholds are different in each state. So you can just type in 1619B SSI Colorado, and you can find out how much your state threshold is this year. And SSI has work incentives that you can use if you're working, and they allow you to get more in the cash benefit at the end of every month than you otherwise would when you're working. These are the student earned income exclusion, the impairment related work expense, the blind work expense, and the plan to achieve self-support. Now, next slide. Title II also has work incentives. And you can use these work incentives if you're qualified after the end of the trial work period, because during the trial work period, those 9 months, you can make any amount of money and continue to get your cash benefit. If you are earning above substantial gainful activity after the trial work period ends, if you're qualified, you can use one or both of these work incentives and continue to be eligible for your entire monthly cash benefit. And the two work incentives on the Title II side are impairment-related work expense and subsidy special condition. Okay, next slide. So we'll talk now about what really is a concurrent. Someone who is a concurrent has to be, first of all, over the age of 18. They have to be receiving both supplemental security income and one or more of the Title II disability benefits. They will receive both Medicaid from SSI and Medicare from their Title II benefit. And most importantly, they must receive a specific amount of money, or be awarded, I'm sorry, not receive, but they must be awarded a specific amount of money every month. And that's really what really kind of defines a concurrent, is that they receive this minimum cash award every month. Okay, next slide. So the minimum award that someone who gets, who is a concurrent, is the federal benefit rate, or FBR, plus $20. Okay, so that is the federal benefit rate is the same as the maximum supplemental security income for an individual. And this year, that amount for SSI for maximum amount for an individual is $943. So you add $20 to that, and $963 is the minimum cash award for someone who gets a Title II disability benefit. So, I'm sorry, not a Title II disability benefit, a concurrent, or a Title II benefit, actually. And so a concurrent has to receive that award. If they don't, well, we're going to talk about what happens. Next slide. So if the person doesn't get that minimum monthly amount this year of $963, and they were receiving supplemental security income prior to being transferred over to Title II. If they're not awarded that $963, they're going to continue to get a little bit of SSI cash benefit, and then of course they get the Medicaid that comes with SSI in Texas. Even if the individual received SSI and Medicaid, and then they are transferred over to a Title II cash benefit, and that Title II cash benefit award is above the federal benefit rate plus $20, they can still keep their Medicaid if the award from Title II is a childhood disability beneficiary or disabled adult child award or a disabled widow or widower benefit. There's a special rule that allows the CDB, DACs, and DWIBs to continue to keep their Medicaid, even if that Title II cash benefit is above that $963 in 2024. To do that, they do have to apply using HHSC's H1200 application form. Now, there's one exception to someone who was on SSI, who's transferred over to Title II, not being able to receive that continuing Medicaid. And that's where paying room and board, if your child is on SSI and they're over the age of 18 and they're not paying room and board, you want to have them start paying room and board. With supplemental security income, if someone doesn't pay their fair share of rent and groceries and every month, they receive a reduced amount of supplemental security income. This is called in-kind support and maintenance, SSI. In 2024, ISM, or in-kind support and maintenance, SSI, is $628.67. Now, Social Security did just pass a new rule that says they will no longer consider food as part of in-kind support and maintenance, but they're not going to change the reduction. It's still going to be a third less than the full amount of SSI. But if you're not paying room and board on the SSI side, when you're transferred to Title II, it could mean that you are still terminated from SSI and Medicaid, even if you don't get that required federal benefit rate plus $20. So we'll look at an example of this. So it's very important that if your child is over age 18 or about to turn 18, you want to start having them pay room and board. And in the state of Texas, Social Security will take a minimum amount for room and board, excuse me, room and board every month, despite how expensive the house you live in might be. And typically, most Social Security offices will accept $275 a month from someone as full room and board. But this is really important to pay attention to if you have a child who's about to turn age 18 or is over age 18. You want to have them start paying room and board because you will retire someday, or, I mean, it's a parent who's retired or passed away. So either one, those things are going to happen in our lives. And your child may start drawing a benefit off of your work record. You want to make sure that if that benefit is less than the federal benefit rate plus $20, that your child doesn't lose their SSI and their Medicaid. So have them pay room and board. Next slide. So suppose you don't want your family member to become a concurrent, and I had a parent asked me this the other day. They said, well, I just want them to stay on SSI and Medicaid. Unfortunately, you don't get that choice. You have to accept the program that Social Security puts you on. And there's a reason why people don't stay on SSI, whether you're transferred to Title II, and it's all financial. On the national level, it's all financial reasons why Social Security does have to transfer you from SSI to Title II. If you're eligible for Title II, you're eligible for a program that is less expensive for the nation to run than SSI. So you really have to take that when they transfer you. Okay, next slide.
I have a question that I want to run by you, and then we also have a question in the chat box. One of the things that you were talking about was 1619B and being able to basically switch over if you needed to, switch over to the Title II benefits from SSI and being able to keep Medicaid. And I just want to talk about that for a minute because I think that that is a common concern that a lot of parents have. And one reason why they say they don't want them to switch over to the Title II is because they're afraid that they're going to lose Medicaid when that happens. And I just wanted to bring this up because I think it's important from a strategy perspective. So sometimes people have the parents are close to full retirement age and they're thinking about flipping on their Social Security benefits, and they've got a child who has a disability that started prior to age 22. And my advice is we need to get this kid qualified for SSI and Medicaid first, because going backwards, like if they're qualified for childhood disability benefits first, then that keeping Medicaid rule doesn't necessarily apply. And I just wanted you to talk about that for a second. So we're talking about a strategy of the parents claiming their own Social Security. And clearly, if a parent is already disabled under the Social Security Administration, or we have a parent that is deceased, clearly they can't help that. But as far as claiming retirement benefits, can you address that?
Sure. Your child might get on to Supplemental Security Income and Medicaid, and when you retire, your retirement, what your child might draw might be more than the federal benefit rate plus $20. And so in those cases, if that's true, let's say I'm retiring, right? And my child has a disability, and the amount that my child would get from my retirement is $1,400 a month. Well, that child is not going to be able to get Medicaid if that's true, unless they were on SSI and Medicaid prior to me retiring. So it really is important, if your child turns 18 and you're thinking about this as part of future planning. This should not be your only future planning for your child with a disability, but it's a part of it. You will want your child, when they turn 18, they may not have been eligible for SSI, Supplemental Security Income, when they were a child due to your income and your resources. But when they turn 18, only your child, they become an adult on their own in Social Security, and only their income and resources are counted. So they could get SSI and Medicaid when they turn 18. And in terms of future planning, that's something you might want to consider. Let's get them on SSI and Medicaid now, even if my retirement is 10, 15, 20, 25 years away. Because when my retirement happens, if my child draws that $1,400, I want them to still have Medicaid, because Medicaid is a health insurance that covers more medical procedures and issues that people with disabilities have typically than Medicare does. Because when you get Title II, you get Medicare only. So that's one of the benefits of being a concurrent beneficiary. And we're on this slide, right? So one of the benefits is that you have total comprehensive wraparound health insurance if you get both the Medicare and the Medicaid. And it is free because Medicaid will pick up most or all of the costs that Medicare does not cover. So that's a really good point that Allison made. This is part of future planning. You may think, I'm not going to retire for 30 years. I'm not going to think about that now. Now's the time to think about it and get that done so that you can get that one concern out of the way and keep on moving with the rest of your future planning. Okay.
Sarah,
So
I just wanted to mention, Sarah, that, we've seen people, because they don't necessarily tell you at the Social Security Administration of, oh, by the way, your disabled child, you should probably wait till they're 18 and have them qualify for SSI and Medicaid. And we've come across families that, kind of ran into a snag because the parents' Social Security was much higher than the Medicaid limits. And one last thing I just wanted to mention on that, one of the reasons that we want to keep them Medicaid eligible, because you'll hear around the water cooler, if your child is getting childhood disability benefits or SSDI, it doesn't matter how much money they have in their name. And that is true as long as you don't care about ever having Medicaid. Most of the families that we work with want to stay Medicaid eligible because of what Medicaid pays for. On top of that, all of the Medicaid waivers in every state, waivers are Medicaid waivers. And they do have different Medicaid programs that come along with those waivers, but the income coming into the individual matters as far as being eligible for those Medicaid waivers. And right now that's about 300% of SSI, which makes that $28.29 per month for those waivers. So I just wanted to mention that. I don't want to get on a soapbox here, but these things really, really matter. And we've seen people permanently messed up because of that little snafu. So I just wanted to mention it. The other question that we had, Sarah, was should the room and board be paid to the parents reported as income on the parents' 1040 as rental income?
Yes, you do become a landlord when you're charging your child room and board. The amount that you charge is so nominal, though, it's really not going to have an impact on your tax returns or any huge impact anyway. But yes, you should. Now, having said that, I don't know that the IRS will ever know that you're a landlord for your child. Social Security doesn't report that information to the IRS. But yes, you are.
We've seen that question come up a lot. And if you ask, 5 different CPAs, you'll get 5 different answers. Some of them basically say if you're charging rent that yes, it needs to go on your tax return, but if you're charging them their fair share, then it does not. And I've asked this question, you can Google it all day long and you will not find a clear answer on the internet.
You won't find a clear answer on it. And that's why I say, look, the Social Security Administration doesn't report to the IRS that you as a parent are collecting rent from your child. That's all I'll say too.
Okay. So we have a question. Does the Texas MERP, MERP only apply to services received after age 55?
Yes. That's correct.
Okay. And then tell everybody, for everybody that doesn't know what a MERP is, what is the MERP?
The Medicaid Estate Recovery Program. It allows Medicaid to collect for the services that they provided to someone after someone passes away. For most people with disabilities, even after the age of 55, and MERP, the Medicaid Estate Recovery Program does only apply to those 55 or older. And for most people with disabilities, they're exempt from the Medicaid Estate Recovery Program. So
I need you to say that one more time. So are you saying that basically the Medicaid Estate Recovery Program doesn't apply to individuals who are under age 55 if they pass away prior to age 55?
That is correct.
Interesting.
Yes.
Very good. Okay. Last question. For now. Can parents opt out of survivor benefits to keep Medicaid eligibility when a parent has passed away?
Can parents, wait a minute, can parents opt out of?
So I think where this is going is we were talking about getting the child, the disabled child to qualify for SSI and Medicaid first. In this family situation, if the parent has already passed away and the survivor benefits are being paid, the kid's disability started prior to age 22. So when they go to apply at age 18, if the survivor benefits are more, then they're not going to get $1 of SSI. And they're asking, is there a way to opt yourself out of the survivor benefits? Is what they're asking.
There's not. There is not.
Okay, that's a great question. But one of the things I do want to mention and just encourage people, because I think sometimes some people feel a bit of panic of if somebody has already passed away or if there's a disability a parent's already drawing and they feel panic when they hear this. There are many, many Medicaid programs across every state. Texas has 109 Medicaid programs. every single one of the Medicaid waivers comes along with Medicaid, and it's based off of the individual's assets and their income coming in, not the parents for the Medicaid waivers. So as long as their income is less than 300% of SSI, when they come up on one of these waivers lists, they may get Medicaid that way. So they may not be eligible for Medicaid under the Social Security Administration, but there are many other doors to Medicaid. So I just wanted to say, don't panic.
Don't panic. Okay, let's go to the next slide. All right, so to know how SSI is affected by Title II, you have to first know what happens to Title II first. And why is that? And if you click, Allison, you're going to see a red box come up here. You're looking at the SSI calculation sheet. This is how Social Security figures out what your adjusted monthly income should be when you're working and you get unearned income and you receive supplemental security income. And you see the very first section is unearned income. So that's Title II disability benefits. So you have to know what the Title II disability benefit is and what's happening with it in order to figure out the rest of this SSI calculation sheet. And we'll show an example of this. Next slide. So we're going to walk through a concurrent. John is receiving SSI. He gets 943. It's 2024. He's transferred to a Title II disability benefit. It could be from his own work record, SSDI. It could be from a parent who has retired or deceased or themselves become disabled, and he becomes a childhood disability beneficiary, disabled adult child, or he could have had a spouse who passed away and become a disabled widow or benefit. The amount of Title II cash benefit John is awarded is $750 a month. Well, that's under the federal benefit rate of $943 plus $20. So that means John is going to continue to receive a little bit of SSI, and he's going to continue to receive Medicaid. He will receive $213 in SSI cash benefit. And this means, and this is, Allison was speaking to this a moment ago, even though he's on Title II, so he gets SSDI or CDB-DAC or DWIB, and he's on Title II, and there's no resource limit. Resources don't matter when you're on Title II, but he's still receiving a little bit of SSI, that 213 in SSI, and he gets Medicaid. So his resources are impacted. He has a Medicaid resource limit of $2,000 a month. So that's important to know as well if you're a concurrent, that even though on the Title II side, you could have $1 million in the bank, if you get some SSI, you can't go above that $2,000 resource limit. Okay, next slide. So here's how his, let's say he's CDB-DAC. This is how his CDB-DAC and SSI looks when he doesn't work. His unearned income is $750. Everybody gets a general income exclusion of $20, and that lowers his total countable unearned income, which is his CDB-DAC, to $730 for Social Security's purposes. He has no earnings, so that second section is blank. The third section is where we figure out how much total countable income he has that will be counted against his SSI cash benefit, and all he has is a $730 in his CDB-DAC. We jump to the fourth section where we take the base rate, and everybody's awarded either 943, the maximum SSI rate in 2024, 628.67 if they're not paying room and board, or 1,415 if they're a couple who are married or holding out as married and both receiving SSI. Well, John receives 943, so we take the 730 away from that, and he gets that small cash benefit of SSI of $213 to bring his total cash award as a concurrent up to 963. So you can pretty much, not always, but pretty much tell if someone's getting 963 that they're probably a concurrent. Okay, so next slide. And I think we want to, yeah. All right. So what happens to his SSI, his Title II, his Medicaid, or his Medicare? What happens to all this stuff? Well, something may happen to his SSI when he starts working, depending on how much he earns. And John does get a job, and he's earning $1,550 gross a month, and that is SGA for 2024. And he's going to continue to earn that amount through September of 2024. On the Title II side, that means he's using his trial work period months. So those 9 months where you can make any amount of money and continue to be eligible for your Title II cash benefit every month. And because he's earning over that trial work period trigger amount of $1,110, he's using trial work period months. Okay, next slide. So this is how it impacts his SSI. His unearned income is still $750. We take 20 away from that, and we have $730 in countable unearned income. Now he has earnings in that second section. He's earning $1,550. He has no work incentives at this point. He cannot use that general income exclusion of $20 on his earned income because he already used it in that first section on the unearned income. He does get to use the $65 earned income exclusion, which brings his countable total earned income to $1,485. And then he gets to divide that by 2, which leaves $742.50 in countable earned income. We go down to the third section where we add the unearned and earned income together. So we add that $730 to the $742.50, and his total countable income that will be considered for a supplemental security income is $1,472.50. Well, that's higher than the $943. So John, during his trial work period, does not get any SSI cash benefit, but he still gets his Medicaid. He's fine. He's in 1619B at that point. Next slide.
We have a couple of questions I'd like to address before we move on. The first question is, if a person receives Medicaid services before age 55 and the person goes off subsequently, goes off means tested benefits, and then accumulates or inherits countable assets, will they not have to be paid back to Medicaid? And then also the other question is,
okay,
kind of tailing this one, is there an able payback?
I'm reading these questions, and these are not questions I want to address at this moment. Okay, if we can.
Okay, perfect. We'll come back to them.
We can come back to those. Thanks. Great. Okay. So nothing happens to John's Medicaid or Medicare. Okay. He's in 1619B at this point, so he continues to receive free Medicaid, and nothing happens to his Medicare. But if he is getting assistance through a Medicare savings program to pay all or part of his Medicare costs, his Medicare savings program may change or be terminated. Not necessarily, but it may. It depends on which of this Medicare savings program he receives. Okay, next slide. So John completes his 9-month trial work period September 30th, 2024. So he's worked since January of 2024. He's completed 9 trial work period months, and he continues to earn $1,550 gross a month. And he enters into his second stage of Title II, which is the extended period of eligibility. He enters into that stage October 1st, 2024. So because he's earning above substantial gainful activity, even though he's technically not entitled to a cash benefit, he's going to get 3 free cash benefits, October, November, and December of 2024. And then he will no longer get a Title II cash benefit. So next slide, we're going to look at what happens to his SSI when that Title II cash benefit stops. Okay. He's no longer getting, you see that first section? He's no longer getting any Title II cash benefit after his cessation and grace period. So we put 0 in there. He still doesn't have any work incentives on the earned income section, but so we do the same calculation, except this time he gets the $1,550 in gross income. We get to use that $20 general income exclusion that we had previously used in the unearned income section, and the $65 earned income exclusion, and we divide that by 2, and his total countable earned income is $732.50. When we take that away from $943, he gets an adjusted SSI cash payment of $210.50 approximately. And that's after his trial work period is ended. So he's no longer getting a Title II cash benefit, and that allows him to pick up a little bit more in the SSI cash benefit. Next slide. Nothing happens to his Medicaid and Medicare. They both continue, which is great. Next slide. This is what happens if John didn't pay room and board. Remember when I talked about that? When he starts to draw $750 in Title II, if he's not paying room and board, he's going to be terminated from SSI and Medicaid because his unearned income is too high for him to receive that reduced in-kind support maintenance SSI. So that means even if John became a childhood disability beneficiary or a disabled widower, both who can keep their Medicaid when they transfer to Title II, if they don't get that required federal benefit rate plus $20, John wouldn't be able to do that because he's no longer eligible for any SSI and Medicaid. This is why it is so important that your children start paying room and board if they do receive SSI. Next slide. So we're going to stick with John. He's still earning $1,550 gross a month. He still receives $750 in Title II, $213 in an SSI benefit, and Medicaid and Medicare. Well, John is 21, and he can use a work incentive on the SSI side called the Student Earned Income Exclusion. And if you want to know more about this, again, go back to the CPG, the Consolidated Planning Group's archive webinars from January 9th, 2024 and February 6th, 2024. But the SSI one is January 9th, 2024, and that goes into more detail about the Student Earned Income Exclusion. So will using this work incentive make a difference when John is in his trial work period and wasn't eligible for any SSI at all? Let's take a look. Next slide. It does make a difference. He still has his Title II, $750. We take away that 20, still $730 in the total countable unearned income. But because he's using the Student Earned Income Exclusion, he can deduct the entire gross earnings that he makes in that month of $1,550 for a period of time. That allows him to not only receive the $750 in the Title II unearned income, the $1,550 in his gross earned income, but he'll also get, as you can see, $213 in SSI. So that's the beauty of using a work incentive. Next slide. You're going to see that the Student Earned Income Exclusion has a maximum yearly limit to it. So he uses this, he can use this January through May, and then in June, he can't deduct the entire amount. He can deduct a reduced amount in Student Earned Income Exclusion. But the great thing is, in June, he doesn't receive a Title II cash benefit. Right? He's out of his trial work period. He's done with that. So that unearned income is $0, and he receives the full SSI cash payment when he's using that Student Earned Income Exclusion. And let's see the very last from July through December is the next slide for John, when his Student Earned Income Exclusion is exhausted. So let's go to the next slide. And you can see the SEIE, he no longer has that, but he still doesn't have the Title II cash benefit either because he's in his extended period of eligibility and earning above SGA. So he does get the reduced amount of $210.50 like he did earlier. But you can see that using this work incentive can be really financially a really positive thing for folks. So they really need to know about these work incentives. Next slide. So that's easy, right? Well, it's not really quite that easy. There's a lot of variables to all these scenarios. For instance, somebody could have more than one work incentive, which could mean keeping the Title II cash benefit even after the trial work period is ended and they're earning above substantial gainful activity. And if they use the work incentive on the Title II side and continue to get their cash benefit, that could impact the SSI cash benefit. That could go to zero. But it's really okay because the SSI cash benefit is never going to be high enough to turn yourself inside out trying to keep it. The thing that's important to keep on that SSI side, if you're using work incentives and you're getting that Title II cash benefit of $750 that John had, plus his $1,550 in earnings, the most important thing is that he gets to keep that Medicaid on the SSI side. So that's the important thing. But there's other benefits, such as food stamps, housing assistance, childcare, any publicly funded benefits that somebody can get can be impacted when somebody goes to work. So we're just looking at the impact of earnings on Social Security benefits based on disability. But then you have to layer on all these other benefits that somebody might be getting and figure out, well, how are those impacted? Does the earned income replace all those benefits that they're getting? The other thing that might happen is the work incentive might end while the individual is working. They may no longer need that work incentive, or like for John, the student earned income exclusion, he reaches the maximum limit and he has no more of it to deduct. And that could cause either or both the Title II and the SSI cash benefit situation to change. So it's really important to know about these things, but to figure them out, that's kind of harder. And that's where you want some help. And there is help out there. Next slide. And this is the waiver services that Allison was mentioning. Being a concurrent won't affect the individual's ability to continue to receive waiver services. Even if the individual loses the SSI and Medicaid, they become a CDB DAC or a DWIB, they can still get the continuing state plan Medicaid by applying using the H-1200 form. Pretty much the worst that's going to happen is their Medicaid is going to start coming through the waiver rather than through SSI. So that's what Allison was talking about. There's all these different doors into Medicaid. We often think of it as a house with a lot of front doors to it. And you can receive Medicaid just by virtue of being on a waiver. Now, if you get Medicaid just by virtue of being on the waiver, or you lose the SSI and Medicaid and you're on a waiver and you've got Title II, and that's what caused you to lose that SSI and Medicaid, you're not going to lose the waiver. You're going to continue to get the Medicaid by virtue of being on the waiver, but you don't have all those protections we were talking about on the Medicaid side, 1619B. You don't have the different work incentives on the SSI side. So that's a whole nother situation that can come up if your child is receiving waiver services. Okay, next slide. Or this one might have a little more to it. Yes, okay. And that's okay because we covered that. Okay, next slide. So how do you figure this all out? Well, as I said, there really is help out there. You don't necessarily have to figure all this out for yourself. And I would caution you from going on the internet and reading things because, you know, the internet's great because you can always find out what you want to hear on the internet if you look hard enough, but it doesn't necessarily mean that's what's true. You can get benefits counseling services from a Social Security certified benefits counselor. If your family member is receiving services from the agency I work for, which is Texas Workforce Solutions Vocational Rehabilitation Services, TWS-VRS, As part of their vocational rehabilitation services, they will receive an in-depth, accurate benefits summary and analysis work incentive plan. And the great thing about this service from vocational rehabilitation is even after we close your case, you can continue to return to the benefits counselor who did this analysis for you for the rest of your life if you need to. Anytime something changes, you lose the job, your pay goes up, your hours change, whatever happens, you lose a certain other public benefit you had, like housing assistance, you can always go back to that benefits counselor for a revised analysis for free. If your family member is not a customer of Texas Workforce Solutions Vocational Rehabilitation Services, you can call the Ticket to Work helpline, and there's the numbers on the slide, and you'll be referred to a certified Social Security certified benefits counselor for free benefits counseling. In order to get this free service, the individual must be working or actively looking for work. So it's not a service where you can call up and say, hey, I just want to know about these programs and how they work and what might happen if I go to work and start earning money. Now, you have to be actually looking for a job or have a job to receive the benefits counseling services through the Ticket to Work helpline. Next slide. So if you're interested in employment, that's what my agency does, Texas Workforce Solutions Vocational Rehabilitation Services. We exist to help people with disabilities find jobs. Our services can include anything within reason that the person needs to achieve an employment goal. That can include the benefits planning. We send people to college. We send people to vocational skills training programs, apprenticeship programs, internships. We do career planning assessment. We provide job developers and job coaches, and many, many more services. Our services are time limited. Once you have found a job and have maintained that employment for 90 days, we will close your case, but you can come back to us at any time that you need assistance in finding a new job, or maybe you need some short-term assistance in maintaining the current job. We also offer services called pre-employment transition services, or pre-ETS, for individuals 14 to 22. And that's to prepare for employment. And to find our offices, there's many ways. You can call us. You can go to Start My VR, which is an online application, short application you can fill out, and someone can contact you. We have an office lookup. You can call the office nearest you directly, or you can email our VR office locator email. And that is it. And now we can go back to those little bit gnarly questions that we were talking about. And that was, okay, if a person receives Medicaid services before age 55 and the person goes off subsequently, goes off means tested benefits, and then accumulates or inherits countable assets, will they not have to pay back Medicaid? I'm afraid I don't understand this question. If the person receives Medicaid services before age 55 and the person goes off Medicaid, that's what I'm getting, and then they accumulate or inherit countable assets, well, then they wouldn't be on Medicaid anymore. So they wouldn't have to pay back Medicaid if they accumulate or inherit countable assets. They wouldn't be eligible to be on Medicaid. So I'm not quite understanding that question. It sounds like you're asking, they received Medicaid services before 55, but then they went off Medicaid and then they came into some money.
I think it's a loaded question because it depends on how they got the money. Because if they got the money to their name directly and it was not in a first party special needs trust, I mean, there's all kinds of different caveats.
But if they went off Medicaid, they wouldn't be on Medicaid, and no, they wouldn't have to pay Medicaid anything back. No. Okay. So
I've got the answer for the ABLE account. And the first thing I want to say is the ABLE National Resource Center. There's a website. They've got lots and lots of information, but specifically on the ABLE payback on the National Resource Center, it's SMD 17-002. There's an article about this 17-002, and you can email me and I'll provide that. But transfer of ABLE account funds to states and estate recovery. And this is under sections 1917B of the Act. It's states are required to seek recovery of funds in an ABLE account that have become part of an estate subject to recovery under the Medicaid, clawback statute. The specific individuals who state Medicaid agencies must seek recovery from are those who received Medicaid at the age of 55 or older, or who received coverage for certain long-term services and were subject to those rules. So it's kind of a slippery slope. That's a loaded question, but it's a great question. But the ABLE National Resource Center has a lot of information, and I personally have sent emails to them before, and they're very prompt at answering your question as well. So if you submit a question to them, they are very, very good at that. Okay, let's see. We've got a couple of other questions here.
There was one question about, I thought all HCS class and DBMD adults on SSI still have a $2,000 asset limit per their waiver. That is correct. Because
that is correct, and I think
Medicaid has the $2,000 resource limit, and that is why.
But I think
they have
the confusion is the income. I think the confusion is the income. So yes,
this
the asset limit is $2,000,
which is
the asset limit is $2,000, but the income limit is 300% of SSI, and I think there's always confusion with that. And one thing, and I put this in the chat box, that 2829, because, and what we're doing is we're taking the $943 a month of the SSI times 3 comes to the income limit of 2829. That is both earned and unearned income. So if they're working, it's their employment income, and it's their unearned income, which could be SSI, could be SSDI, childhood disability benefits. So that's that 300% number that we were talking about. And most states still have the $2,000 asset limit. California just recently raised theirs to $130,000, but that does not apply to the majority of states in the United States. California is an exception to that. I just wanted to mention that, but most states are still under $2,000. And I hear all the time I heard they raised it to $2,000. There has been some $10,000. There's been some proposed legislation that they're going to increase this number, but it never passed. So if anybody tells you that it's $10,000, it's hanging out there, but it never passed. So that is not correct.
Right. And then Terry Saltzman says, I was under the impression that you must have Medicaid to be eligible for the waiver. No, you don't have to have it. You have to be otherwise eligible for it, though. And that doesn't necessarily mean that you do meet you have to meet the special income limit that Allison's talking about. And that's why that special income, that 300% rule does exist in most of the waivers. It doesn't in Texas Home Living, but it does in all the other waivers. So if you are otherwise eligible for Medicaid, you can get on a waiver and get Medicaid that way, which is great. And then Estelle Slama says, could you please explain what is Title II room and board? No, because there is no Title II room and board rule. The room and board rule only applies, Estelle, to Supplemental Security Income, to SSI. That's where room and board applies. It doesn't apply on the Title II side. Okay.
So let's clarify that one more second, Sarah. So basically, what she talked about was a 1/3 reduction to SSI if the child is not paying rent or room and board. So instead of getting $943, you would get basically $629 a month for SSI if there's not a room and board or rent agreement in place. That's on the SSI side. But once the child switches over to childhood disability benefits or SSDI, there is no reduction to those benefits by not having a room and board or rent agreement in place. Okay, this last question that we have is a great one, and I think you see it on your screen, Sarah.
I do. Yeah, it's my son went on CDB DAC benefits last year and the monthly amount is more than SSI. Instead of denying my son's SSI, SSA suspended his SSI, and I'll explain that in a moment. Thus, Texas HCS did not receive any notification to deny Medicaid, so my son can apply for DAC Medicaid. Okay, so when Social Security terminates someone, they never terminate them. They always suspend them for 12 months. And they do that because in case something happens and they need to reopen that record. Once Social Security has terminated or closed a record, they cannot open it again without a new application. So they don't want to do that. So they suspend the benefits for 12 months. HHSC was notified. I think that what happened probably, I'm guessing at this, Beth, but I would imagine what happened is during COVID, no state was allowed to terminate anyone's Medicaid because all states received a huge sum of money from the Centers for Medicare and Medicaid Services to continue Medicaid during COVID. And so a lot of people have been kind of caught in the COVID Medicaid and are being, they started termination last spring and they'll continue through, I think, November of this year. HHSC will to terminate everyone who was getting COVID Medicaid. And it sounds like your son might have been caught in COVID Medicaid, and that's what he was, that's why the Medicaid kept going rather than, it doesn't matter that the transition to DAC happened after COVID. He was receiving SSI and Medicaid while COVID happened. And so even though Social Security did send an electronic notice over to HHSC saying his SSI has been terminated, his Medicaid continued due to COVID. You can apply for CDB DAC Medicaid once his Medicaid is terminated, which will happen soon. They are in the process. They're at the end. They terminated groups of people, and they're right now, HHSC, Health and Human Services Commission, right now they're in the process of terminating people with disabilities who received COVID Medicaid but should have been terminated. So he should be terminated pretty soon. Yeah, he got his first DAC check in December of 2023. So that was still during COVID Medicaid. So he'll be being terminated from Medicaid really soon. What I would do if I were you, Beth, is I would apply for a CDB DAC now because it takes a few months, and his CDB DAC Medicaid now, it takes a few months for HHSC to transfer that over. They have 45 days, so a month and a half. I would go ahead and apply for it. Just type in HHSC H1200, Google that, or you can go to Your Texas Benefits and the H1200 application is there, okay? And apply for that CDB DAC Medicaid now. When you apply using that H1200, Beth, be sure and write DAC, D as in disabled, A as an adult, C as in child, DAC in big red letters at the top of every page of the H1200 application, okay? And that helps HHSC know this person is a DAC and they need to be moved through the system.
That's great advice, and I wanted to ask about that so they can avoid kind of a lapse in Medicaid, which is a huge deal. When I have one last question, and I know we're out of time today, you guys have asked great questions today, so thank you for that. One question that I have is when a person comes up on the waiver list, so let's just say they're getting childhood disability benefits, they've switched over completely to childhood disability benefits. They qualify for Medicaid first, so they got to keep Medicaid, the SSI Medicaid they got to keep. And then let's say for a moment that they came up on the HCS waiver, which comes along with Medicaid. Does it matter which Medicaid program they get? Should they switch to the HCS waiver? Medicaid or keep the SSI Medicaid, or does it matter at all?
Well, it does matter, actually. The SSI Medicaid comes with an incredibly important protection, and that's 1619B. So that means that even if you earn enough that your SSI goes to $0 a month, your Medicaid will continue. Okay. Now, if you're on what we call regular state plan Medicaid, there are other financial restrictions to that Medicaid. So it's better to keep the SSI Medicaid than it is to keep the continuing CDB-DAC Medicaid.
Perfect. That's a great answer. Thank you for that. Thanks, everyone. We're out of time for today. Certainly been a pleasure. We've got Sarah's contact information in the chat box and the slides. Everybody's going to get a copy of today's slides, as well as a link to the recording, how to reach out to us directly. We always offer free personalized consultations. This QR code will take you to a calendar where you can schedule with us, and Sarah's contact information will be in there as well. It's certainly been a pleasure. Sarah, as usual, you did a great thank you for all of the information. And guys, you guys are feeling overwhelmed. It is a lot of information, but there is help out there for you. So don't feel overwhelmed. Don't do this alone. And we're glad that you guys took the time to be here with us today. Thanks so much, everyone. Have a great afternoon.
Thank you. Bye, guys.
Bye now.